Hi, my name is Neil O'Brien, and you're very welcome to today's webinar. It's all about cash flow forecast and why I firmly believe that it's the number one tool that business owners have and can use to help us get through this current Covid-19 crisis. It's unprecedented times. Unfortunately, a lot of businesses have closed already. If you're a business owner, there's no doubt you've seen an impact. Your sales may be down 30, 40, 50%. I was talking to one client earlier, his sales are down just over 50% and he expects another drop of another 10%. So he's going to be operating at 40% of what his sales were just a couple of months ago. So there really are unprecedented times, and I think this is a fabulous tool to take you through what you need to do to get through. So today I'm going to be telling you how to prepare a cash flow forecast and then how to use that information. So this is what we're trying to avoid. It's about survival and hopefully then thriving and getting through this difficult times and making sure that we don't sink, as unfortunately some businesses have done already. Now, I said, look, if you're a business owner, you're probably worried about getting paid. You may be thinking, how long can my business survive? What about staff? You may have let people go. Do you have other decisions to make about pay cuts, about reduced hours, 3-day weeks? What about the revenue holiday and the bank? The banks are saying a 3-month holiday from mortgage payments and loan payments, supposedly. Should you avail of these? Do you need to avail of them? Or are you just kicking the can down the road? These are all questions that you can factor into a cash flow forecast, and it can help you make good decisions and better decisions at this time. A small bit about my own background. I worked as a management accountant for 15 years. Then I started my own consultancy business in 2003. So I've tons of experience. I've worked with hundreds of businesses of all shapes and sizes. Done a lot of work for the local enterprise offices and leader groups like CCAD, as well as private businesses, and prepared hundreds of cash flow forecasts. We've been through the whole downturn 10 years ago with cost reduction and credit control, but cash flow forecast is probably the main thing I'm going to talk about today. So 2 things I'm going to cover. How do you prepare a cash flow forecast? And then when you have it, how do you use that information to make the right decisions for your business? I have an example of a guy called John, not his real name, a maintenance business that I did some work with recently that may help explain these terms. What do you need to prepare a cash flow forecast? You need some recent bank statements, maybe the last couple of months. Just go online and print off your bank statements, or you may have hard copies to see what cash in and cash out has been for the last couple of months. You need aged debtors, a list of the money you're owed from your customers and how long it's outstanding, and the same for creditors. And then accounts, if you have a set of accounts, annual accounts from your accountant, or if you prepare your own management accounts, you may have more up-to-date figures. All of this are key inputs into a cash flow forecast. So I'm going to go on out and show you an example. So here's a spreadsheet, and I'm going to show you an example of what I prepared for this maintenance business, and then I'll take you through a blank template. So let's just start off with a summary of this is the maintenance business. We've prepared a cash flow forecast for him. So here's the main parts of a cash flow forecast. This is a weekly one. You can do monthly as well. Some people do daily, but I think weekly at the moment is probably a good time period for most businesses. John's business is $4,500 in the bank, week ending the 27th. Cash in, we anticipate 57 grand coming in this week, 19 going out, so the bank balance looks nice and healthy. And all you're doing is week by week estimating how much cash do we think is going to come in, how much cash is likely to go out, what's our closing bank balance likely to be. And it's not about getting it 100% accurate. You're never going to get it 100% accurate. And people often say to me when I talk about cash flow forecasts, as you can't predict the future, and sure, I don't know when I'm going to be paid and whatever. Well, you may not know 100%, but you can still take your best estimate at the moment. That's what you're doing. You're trying to give yourself a window into the future to say, what's my bank balance likely to be? And as you'll see with John in a moment, when he gets into May, unfortunately, the cash in starts dropping off, and his spend is staying the same. And what happens is his bank balance goes negative, minus, and you can see 22nd of May, we're anticipating that John's bank balance might be minus 29,000. Now, John doesn't have 29,000 as an overdraft or stuck under his mattress, so John is going to have to start making decisions back here, probably in April, to make sure that it doesn't go negative. And this is the real power and value of a cash flow forecast, is that it gives us the information to make better decisions. And that is what business, that's a key element of business. That's if you have better information, you can make better decisions. If you have poor information, you may make the wrong decisions. So that's what this forecast is all about. Now, this is a summary of John's maintenance business. We're going to go now look at the detail, because there's a lot of numbers on this spreadsheet, and I appreciate numbers isn't everybody's forte, but if you're doing a cash flow forecast, actually it'll probably look something like this. So John is estimating his cash in week by week, and then down below you can see all his regular cash out. He pays himself monthly. Wages is the big one. Wages is weekly, about 6,200 per week, and we're just anticipating a similar figure here. And of course, as we go along week by week, once we get to next Monday with John and the week is complete, we can just go to the bank statement, update the actuals, and then we can also maybe revise some of the forecast for the weeks ahead. So cash in is row 9, cash out is row 24 down here, 9 above, and closing bank balance. And as you can see, there's a problem over here because it goes red. Now, where did John, I prepared this with John last week, so where did John actually get his figures from? Now, if you look at cash in, there's actually two lines here. There's the money he's owed at the moment from his customers, and there's also cash in from future sales. So where did this figure come from? Well, if you come over here, cash in debtors, this is what they call an aged debtor report. Now, obviously I've taken out names for confidentiality, but I've listed some of John's top clients. This is his current, so that his current invoicing in March, 30 days. This is February's in work done, and he'd be hoping that a lot of this will come in at the end of this week. Actually, the last week in March is a very, I suppose, common time when businesses get paid. In total, John is owed 178,000, and here you can see current, 30 days, 60, 90 and older. So this is going to be a key input into John's cash flow detail. So he has to, and what we need to do, and what we've done to prepare this forecast is, for example, we've looked at the money that John is owed at the moment, and we've anticipated that of the money, this is the February invoices, we've gone through this and estimated about 80% of it is going to come in, as well as some of the older amounts as well. So the debtors report, and looking at that and deciding client by client when it's likely to come in, is a key input into this. Now, what we did there for a couple of weeks is John got on the phone himself, and his main accounts person got on the phone, and they were all the big clients, there's about a dozen of them there, went through the money that was owed, and got some commitment dates from their clients about when that money is likely to be paid. Unfortunately, some of them are no longer around, but they are actually some of John's smaller clients. So the cash in is coming from what we call the aged debtors, and talking to clients and trying to get them to commit to dates, or give some commitment of dates when John is likely to be paid, and that's the key input here. Now, down below, cash out. Earlier on I mentioned bank statements. We have John's, he does management accounts every 2 months, so that's like his own internal profit and loss. We have that information. We have his bank statements from the last 2 months. So based on those, we went through them, so we know on average, he pays himself monthly, his wages weekly. A lot of the other bills excuse me, are paid monthly, as probably like yourself, a lot of bills, insurance and light and heat, those kind of bills are typically paid monthly. So we put them in the times they're paid, whether it's the end of the month or the start of the month. Like insurance is paid in the first week of the month, light and heat is normally paid the last week, and so on. Motor expenses is quite a big one for John, and so on. Now, down at the end here, we have the revenue payments. PAYE and PRSI is normally around that. You'll have 4 or 5. Some months will have an extra week, and VAT. Now, so that's where the information comes from. And here's the closing bank balance. Now, that is John's how we prepared his figures. Now, what he does with the information, and this is probably again the real value in a cash flow forecast, is, like I said earlier on, unfortunately John's figures are going into red. So if we look over here at the end of May, John's figures we anticipate is minus 29. Well, it can't go to minus 29 because he doesn't have an overdraft facility. So what are John's options? Well, on the cash in side, he can go back to his debtors again and see if he can get any of that money that's owed to him in a bit sooner. He can look at, when it comes to costs, you have to look at your bigger costs. At the moment, John's sales are down about 18% so far. So he has been affected. No, not as much as other businesses. He has about 8 guys on the road. They call into some large manufacturing companies. They have smaller clients as well. So John at this stage hasn't made any major decision about staff, but undoubtedly they're not as busy as they were. So he's going to have to look at wages at some stage. Obviously, if he 1 or 2 guys come off the road, then his motor expenses will probably drop as well. But the other thing he's going to have to consider is that revenue have said that businesses can defer the payroll taxes. That's the PAYE and PRSI that's normally paid monthly. So at the moment we have this in as being paid at the end of this week, 5,400. John would have the option of deferring that, and the same with the next probably 2 or 3 months. VAT is the other one. Revenue have come out and said that VAT for January, February can be deferred. So as you can see, I'm just going to minus those for now. Okay, if I take, and this is what the cash flow is about, it's what if scenarios. So if John goes and defers some of those payments, I've obviously had them red, there is still a minus here. So would John have to go and defer? No, they're obviously gone back to positive. I just had those changed to red to make them stand out a bit more. If John was to defer his payroll and his VAT payments, the next 2 payments of each, then it would help him come back to positive. Now they will have to be paid further down the road, so it is one option. Seeing as his sales are down 18%, I think John is a little bit reluctant to do anything on the wages at the moment, but this is the beauty of the what if scenarios. And even looking at those figures, if John did, I'm just going to change these to 5, if he did drop out, if he left the revenue payments in there and took out a couple of members of staff, it would help, but it may not give him enough. That could be about 1,500 a week. Yeah, and this is all the what ifs. I suppose this is the real strength of this document, is you can start doing what if scenarios. Yeah, it's you see John is back to negative here now again. Yeah, it's a brilliant tool. So that's John as an example. Now if you're there going, here's a blank cash flow template you can use. So how do you prepare yours? Well, similar to John, cash in current debtors, if you have a list of the money you're owed from your clients, what you need to do is you need to establish when those monies are likely to be paid, if they're going to be paid. Some of them may not be paid. For example, if clients are gone out of business, then it's highly unlikely you get paid, or certainly there's a major question mark over it. Are they going to open again? The best thing, what I recommend people to do, is get on the phone, get onto your clients and just try and establish some likely payment date. Even if you have to put a payment plan in place for some of them, whatever it is, established, because the more information you have on this, the more accurate your forecast will be. Get your bank statements from the last couple of months and go down through them. You'll see what all your regular payments are. If you have staff, you're going to have wages, insurance and so on, and revenue, and put in, maybe starting point being put in all the regular ones. So maybe put in your revenue payments and your VAT and so on if they're due. See what the numbers are like. If you have loans, the same thing. The banks are talking about a 3-month holiday on loans. So put in your figures, which you'll be able to get from your debtors, from your bank statements, your creditors. If you have a lot of suppliers that are owed, again, they will have to go in and prepare this forecast. But it's a bit like John. You could see here, John, when you have the figures in there, if you're going red, like unfortunately John has, then you're going to have to make some decisions to try and turn those back to black. Whether that's cost cutting, getting money in from clients quicker, availing of the revenue deferral periods, availing of the bank, and so on. Now hopefully, again, I think the government are going to have to do a lot more, like they've done in the UK, where they're covering up to $2,500 per month for employees who've been laid off, subsidising that payments. I think they're going to have to do something and do it pretty quickly. So that's it. If you have any questions on this, I'm more than happy to answer them. If you need any assistance with preparing a cash flow forecast, you can email me, neil@quantum.ie. I'm like probably a lot of you, I'm based at home, so with less travel time and so on, I have a bit of free time, so I'm happy to help people. Email me any questions you have. I said neil@quantum.ie. If you need any assistance, I'm more than happy to help you, and hopefully you found that useful.